Have we yet to see the market response on this one?
I don't know. Yesterday it was all central banks, and I guess
Yes.
Mr. Trump got a little bit jealous and threw another curveball. So I think that we'll have to see just what the Chinese response will be to these $50 billion in new tariffs. But there's going to be a reaction. It's almost inevitable. And China has said that the broad agreement that the United States and China would, over a period of years, reduce the trade deficit of the United States by up to 300 billion. That agreement will no longer be valid if the United States now jumps in with tariffs. So that's the problem, and I think we'll have to live with that. There's the same situation as with Europe. We're going to see a slowdown in global economic growth and trade as a result of that. That's inevitable.
So in your view, is this as good as it gets then for the global growth picture? We've heard some growth updates coming from various central banks this week. If this is as good as it gets, how do you respond as an investor?
Well, the central banks will have to adjust to this new situation. The global growth was helped a lot by Trump's tax cut and the expectations that this would help overall growth and trade, because if the U.S. consumer spends more, then there's going to be more world trade. Now, if we're dialing that back, then what the former Trump advisor Gary Cohn said yesterday is absolutely right. The benefits of the Trump tax cut and of the deregulation in various sectors of business will be undone, and more so by this situation. So I'm afraid you're right that growth at this point is not going to reach the levels that had been expected earlier this year.
And Uwe, when you talk about the central banks adjusting, one central bank that certainly doesn't seem to be going anywhere anytime soon is the BOJ. In fact, tweaking their inflation forecast for consumer inflation a bit to the downside here. Does that concern you at all?
Well, look, we've been, I don't know, seeing this for decades, literally, right, in Japan. I think this is an endemic situation. Japan should give up on inflation goals, because I think that doesn't make a whole lot of sense. They should see what is necessary to have an economy running at relatively full employment and be able to, under those circumstances, live with a mild deflationary situation. I don't see why that's such a big deal, especially not in an aging society, because in a rapidly aging society like Japan's, older people on fixed income will be happy if there's no inflation in the system. So.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.